And volume. All right, volume's good. Welcome to Charts and Coffee, gang. Great to see you all. Almost started off the show with the volume on mute. Been there, done that. All right, so great to see everybody. Happy Tuesday, everyone. All right, got a lot going on this week. We've got ADP payrolls tomorrow. That's the countdown to non-farm payroll on Friday. We've got the end of month, end of quarter shenanigans coming up. So we have a lot going on this week in terms of what this market wants to make of the last 2 weeks of March. I mean, the last 2 weeks of March have been pretty bananas. I say bananas because the way in which we've rallied in the face of increasing rates, whether that be a quarter now and a quarter, we have the quarter of March, another quarter, maybe half coming up in May. Very interesting price action as rates are moving higher. Now, some folks might say, but Rog, they really haven't in any meaningful way started to unwind the balance sheet. That's a given. I hear you. And then, if you track the data over at the Fred, the St. Louis data website, you'll see we're still seeing ticks up in mortgage-backed securities. Now, from what I understand, those do have a sort of, we bought it now, it ends up on the balance sheet sort of delay. I don't know. The FOMC doesn't text me, but I think there are some delays. So I don't think it's as much shenanigans as it is going to be a very slow unwind of that balance sheet. And, we haven't stopped asset purchases. Those two are being slowed down. It's a mess, gang. I mean, it's really a situation where the Federal Reserve knows they can't keep printing. They know they've got an inflation problem. They've already begun hiking rates, but we're still printing. Yes, does it sound dizzying and slightly surreal? Welcome to modern monetary theory. So that's where we sit right now. And in the middle of all that, we've got an equity market that's acting like it wants to put in a bottom. Here's what my advice has been, and it's going to map to my trades, my actions as a trader, and then also the kind of alerts that I send out. I want to be able to trade most of my book, not all of it. Some of my positions are going to have exposure to what's going on in the broader equities. S&P, NASDAQ, Dow, Russell. Russell less so, but those three major indices. I'm going to have some exposure to that, but most of what I want to have on in the market, I'd like to be not relying on what's happening in the broader averages. I want to be free of that influence. In other words, remembering that high concentration weighting at the index and the sector level is really hard to trade through if you're trading a particular stock in one direction while the sector or the index is moving in another. Are there opportunities to do that? I think mostly in tech, mostly in your XLK, XLC, XLY group, tech, communications, consumer discretionary. There are some really good trends, but there are ways to say, look, I don't really care what's happening in the broader averages. I want to focus on the inflation narrative. And that continues to work really, really well. So that's how I'm handling this current environment. And here's the thing, gang, when and if we're wrong, and I'm probably on the cusp of cutting 2 trades loose here pretty soon. XLC and CLOU, we're going to take some paper cuts here. Probably pretty likely, if not already, depending on what price was paid for the option. Now, agro, moderate, conservative levels, just like we scale in, we can scale out. So I may be able to hang on to a small part of this trade, but here's the bottom line. When a trade exceeds your point of validity or your allowable risk, let it go. It's never emotional. The market is not out to get us. I can promise you that. It's out to seek price and volume, right? Remember, the most of the market's mechanisms are just filling orders. Think about the industry around simply filling orders and getting compensated for that, right? So the market is always a volume sort of seeking missile, if you want to look at it that way. Think about where your stops are in relation to size. Think about where your stops and entries are in relation to major psychological levels. And that's going to start allowing you to understand if you're in that mosh pit or if you're in that area just outside of the mosh pit and you can see in and see what's going on. So anyway, that's what we're focused on here. Most of the book is very productive because most of the book is based on inflation. That is a far larger tectonic plate in terms of market influence. And so it's a little bit more steady. It's not as twitchy. And that's been working really well. So the first question up. All right, so let's get to it because as always, this show is about your questions. And it's a question on gold. Absolutely. In fact, gold's going into the daily notes today. Many of you that may or may not know, we put out notes. In fact, we've got our weekly notes that go out with more of a sector and macroeconomic view. And then during the week, Monday, Tuesday, Wednesday, and Thursday. So I have notes that go out Sunday, Monday, Tuesday, Wednesday, Thursday. Friday, the markets are winding down. Maybe we'll have some notes, but most of the time we're not prepping for Saturday. So Sunday through Thursday. And in today's daily notes, Peter, yeah, gold is on the radar. Absolutely. It's been selling off pretty sharply. You can see what's happened just since about 8 a.m. And this is actually terrific. This is allowing us to get another shot at a zone that we've taken advantage of before. And you'll see it's very much defined by the Darvis levels. It's very much defined by the fact that this has generally been a market with the path of least resistance to the upside. So I'll definitely be looking at another entry in gold, really as we sink down to the current levels. Now, for those of you that may not trade the full size gold, remember there's a micro gold, there's also GLD, and you'll see pre-market. Where are we? We're way down here near those Darvis levels. So I'm going to grab my Darvis. I'm just putting a line across that level so it just visually pops a little bit more here and here. And then, for those of you who know that, hey, we want to place alerts, we want our platform babysitting these levels for us. So we're not having to stare at it. We could be free to look for other trades or do whatever we need to do. Let your platform be your trading partner. And I already know we're going to see some alerts going off and we're going to start looking at how we can build another long gold position. We did it once already, 1516, rode that higher to our initial target. So yeah, I want to refire a very similar strategy, likely from a very similar part of the chart. All right, next up, Amit, how are you? So Amit and everybody, I do not use Telegram. I do not have, I'm not going to DM you ever asking for money to manage, and I'm not going to ask you about Forex and crypto. There are some seriously disturbed people out there that are imitating many of our simpler trading traders. We are never going to reach out via social media to solicit your money to manage, right? So when and if I open a hedge fund, I'll let you all know. But if anyone reaches out to you via Instagram, Twitter, Telegram, I don't know, whatever else is out there, tell them to go pound sand. And well, I've said much worse, but this is a rated G show and I shan't go there. But yes, I am not on Telegram, my friend. And thank you for asking, because there are some serious scammers / scum that are out there that are just, targeting our members. And I'll tell you what, you target our members like that, these folks out there doing this, I just want to walk into the forest with them and come back alone. You know what I mean? Very awful people doing some very awful things. All right. Next up, James. Good morning. GLD. Yep, we're getting there. 55 EMA propulsion, which is the 8 EMA crossing the 55. We've got a Darvis 2.0 in there. If you don't have the Darvis, gang, if you don't have automated support and resistance on your chart, head on over to countdowntrader.com and you will find, in fact, hang on, do I have Countdown Trader up here? Let me show you here real quick because I do want you all to get your hands on this stuff. We put it on the site for a reason. All right. Head on over to countdowntrader.com. Scroll on down. There are some great updates that Trish has been putting together for you. We get together a couple of times a week. We talk about what's moving the markets right now. What are the things that we need to think about? Probably in the next few days, we're going to start talking about the 642 earnings window. How do I use this 642 earnings window to understand the psychology that goes into trading, right? So you'll probably see that come right back out again because that's a tactic that I've been using for many, many years. Anyways, check out the content. And then on the right side, you see where it says free downloads? We offer the grab, the wave, propulsion. And you might say, Rog, where the heck is that Darvis? I know. I don't know why it's not listed here. Click on either one of these think or swim links and you'll get the entire box folder full of the goodness. Grab, which includes the wave, Darvis 2.0, automated support and resistance, and the propulsion. Okay. So just want to make sure everyone has access to that. And then if you're on TradingView, really quickly here, gang, click on indicators. And when you're there, search simpler. And you will see Darvis box, no lock, grab candles, and that includes the wave, no lock, propulsion, no lock. Those are free. Okay. You can throw them on your TradingView charts as well. All right. So yeah, James, we're going to be, only thing that might keep me from doing it today is if we get that larger than historical volatility move, James, it might suggest we're better off waiting until we get a better feel for whether or not there's that pause candle, there's a bid, there's support waiting. But chances are we'll get that alert out today, James, probably this morning after 10. All right, next up, do I set hard stops on my intraday trades? Ian, I do not. Then use alerts on my longer term trades. Ian, so if I'm day trading, I'm in front of the computer. I'm going to say this. It may not be something that everybody believes, but I'm going to, I'm going to tell you what I think, what's what. There is no way to remotely trade intraday, right? So the idea that you're not going to be in front of the computer trading 1 minute, 2 minute, 3 minute, 5 minute time frames, I think is very unrealistic. So I do not place hard stops actually in any of my trading. I'm always aware of risk. My longer term overnight exposure is probably 80% options, long calls, long puts. So the risk is completely defined. And in the futures that I have open, we're aware of the hot zones on the calendar. We're aware of historical volatility, and all that helps me better manage the risk. And I haven't used physical or hard stops in probably 2 decades. I'm not saying this is for everyone, but it's the way that I do manage my trades. I do not use a physical or hard stop intraday, but especially intraday. So if I'm in front of the computer, I really don't need to. Does that make sense, Ian? And then as far as how I set up my stops, if it's intraday, I'm watching it. I know what the levels for validity are. And if it's end of day, it's usually an options trade or it's a futures contract. And I already know the point of validity or the percentage of premium I'm willing to risk. And I will place a lot of alerts on my charts. So great question. Thank you, Ian, for that. Terrific question. Hey there, Mike. New mastery member. Oh, very cool. Welcome to the Sector Secrets think tank. Awesome. GLD 178, 175, 177. I'm going to send out a new alert, Mike. So I don't necessarily re-enter at the previous trigger levels because, volume has updated. Levels have changed. Moving averages are in different spots. We have a lot of dynamic levels in our trading. So it's not going to be a refire, very likely, but we're getting close to the zone. So I'm not going to put, so what am I going to be looking at? I mean, I'm looking far lower. We're 178s, 177s, probably, Mike. So I'll send out. So for those of you that don't know, what Mike was just explaining is when we send out a trigger, you don't get a filled order alert. In other words, I don't tell you after I've entered the trade. And that's perfectly fine, but that's not what we do in the mastery. What we do is we say, hey, look, when GLD reaches a certain price level, and we prefer to do that with some advance notice. So when GLD reaches a certain price level, then it's kind of a when to then. And then we'll go ahead and buy whatever option. So I'm still looking at triggers, Mike, and I'll send that out when I like what I see in terms of levels. All right, next up, I see a Darvis line on Freeport McMoran, and the candle color change. What exactly does that mean? The candle color. So there's a couple Darvis levels, right, Painter, and the candle color changed. Oh, you mean in terms of the shade? So there's actually three main colors and six altogether. Green, any shade of green, light or dark, is a bullish candle. Blue, light or dark, is a neutral candle, and red, light or dark, is a bearish candle. The light colored candle. See, one of the pains in the neck about color coded candles is that what I found when I used to use those way back when is you could never differentiate between an up close and a down close the way you could with traditional Japanese candlesticks, hollowed out candles shaded in red or green, right? So what we did is an up candle where the open is lower than the close, right? We trade up that day, a shallow, not a hollow candle. If it was traditional Japanese candlesticks, that's a light color. And a down close, the shaded, is a darker color. So light green is a bullish candle. We opened and closed higher, while the green is still a bullish candle, but we close lower than the low. That's all. So we're trying to keep that traditional Japanese candlestick interpretation there with the shades of green, red, and blue. Okay. All right. Next up, what are my thoughts on Zim? I really don't have any, to be quite frank. We had ex dividends. We traded down through support. I really don't. Obviously we've broken this chart down before here in the room. I don't have any skin in this game. However, that being said, if there is anything to do, Jamie, it's really long and long only, right? It's really long and long only. The thing that I would say is you've got to know what group, what is the tide that Zim is trading within. That's probably the main thing that I would have to go determine. However, I think what we had talked about before regarding Zim, so I recall this was probably a question we asked, somebody had asked, I don't know if it was you, Jamie, or somebody had asked not too long ago, is, how has Zim pulled back previously? What has been the characteristic of Zim? Take a look. So it's kind of moving in a way that it has before, which is it doesn't stop at the wave, right? It doesn't stop at the wave. It goes below it. So that's almost your sign. That's almost your signal that, hey, if within the context of an overall uptrend, we are now piercing the 34 EMA on the low, now we pay attention. So I would say it's still viable. Just remember that when it does sink into the wave, it keeps going just a little bit before it starts moving higher. So I'd say Zim is pretty much moving sort of in the characteristic of what it's done in the past. All right, one more question before we wrap up is, what are your thoughts on ZS and ZC? Yeah, Kevin, this is another one that's absolutely part of today's notes that's going out to members. And so let me give you a little sneak peek of that. We want to pull back into the wave, and we are getting it on both soybeans and on corn. And so, yes, now I'm going to start looking at the grains. We're going to start looking at the possibility that this could be a pullback that we want to look at. Here's what I would say, Kevin, and this is where a lot of traders, when they're trading grains, sometimes get blindsided. We've got to know the USDA calendar. In other words, are we getting some sort of crop report? And if we are, think of those crop reports akin to non-farm payroll in terms of impact on equities. We need to know if that's what we're moving with or if we're getting close to one of those reports. But technically, we are in the zone. So great question. By the way, for those of you that do not trade futures, CORNSOYB are the ETF alternatives. All right, gang, have a great one. Thanks as always for the questions. I will see you all tomorrow, same time, same station. Be good to each other.